There is a number of things that you can do to get yourself ahead of the game when applying for your mortgage. And one of these things is making sure that you're preparing and getting all of your documents ready at the earliest possible stage. You don't want to be waiting 2, 3, 4 weeks to send your documents over to your lender or to your broker, only to find out that you've lost 4 weeks in a process that can ultimately take 8 to 12 weeks in some circumstances. So being really quick with your documents is certainly handy. And in today's episode, I'm going to talk you through the key documents that you're going to need when applying for a mortgage in order to help you best understand what's needed and to how to gather them early. The first thing and the key thing to think about is your ID. So you're going to need to provide ID when you're applying for a mortgage in Scotland, and the ID that you're going to need to get is things like your passport, driving licence. If you are from overseas, you're going to need to provide a visa. Now, it's important to understand there are some limitations with these, so make sure that these things are valid and in date. Your driving licence, make sure it's got your right address on it. Make sure that, well, your driving licence, it can also be your provisional licence, but make sure it's got your right address on it. That can avoid complications as well. And your visa needs to be in date. And it could depend on how long you've been in the country as well to determine what type of mortgage it is that you will qualify for. But that's the three main types of ID verification that I come across. Typically speaking, the easiest way to provide proof of your ID and your address is to provide your passport to show who you are. And your driving licence, that ticks another box to show where you stay. And that ticks the boxes for ID and address. And that's the easiest way to do that, is to provide those two documents. Then what you need to consider is your income. How you're going to be able to evidence your income is also going to be key in determining how much you can actually borrow. So I've put together just a very, very brief guide on how to do that. A few things that you would need. So if you're paid weekly, my suggestion is to make sure that you're keeping your pay slips, at least the last 13, but longer if you've got them. If you're paid 4 weekly, keep your recent 4. And if you're paid if you're paid monthly, keep your recent 3. Bonus, if you are getting paid things like bonus, if it's annually, I would keep at least the last 2. Well, if it's anything less than monthly, I would be keeping at least 2 years worth of bonus pay slips as well. And you can evidence them, and most lenders will take that into consideration when applying for your mortgage. It's important to understand how that income is going to impact your chances as well. I've done a previous episode on the factors of things like bonus and commission and what these would have on your affordability. So don't forget to check out the affordability episode to find out more about that. But if you're self-employed, there's a few things that you can do. So firstly, you can start to consider your SA 302s and tax year overviews. These are documents that HMRC would provide you or your accountant to show how much you've earned and what tax you've paid for that year. The same goes for business owners or limited company directors, usually with 25% shareholdings or more. But SA 302s and tax year overviews are a great way to provide income evidence. You can also use your accountant's reference. So an accountant can actually write, depending on the lender, write out usually 1 or 2 pages, little brief bit of information, and the lender can use that. It can be 10 times easier than a lender having to read through the full accounts, and it gets understanding of the key questions getting asked from the lender, and the accountant can put that into words for them, which is ideal. Full accounts could be a way as well that you can use to provide evidence of your income. And then in some instances, if you are self-employed or a business owner, you can use your pay slips and P60. An example of this would be if you're not taking any dividends from the company and it's just income through salary, you can use your pay slips and P60 as well. So that's income. Moving on to bank statements. So I'll quickly go over this. Typically, you'll be asked to cover 3 months worth of bank statements. If you're getting asked for 3 months worth of bank statements for everything that you've got, you need to consider current accounts, savings accounts, kids accounts, joints accounts, business accounts, any recently closed accounts that you've got, because what the lenders are looking to see is the paper trail of money getting transferred. So if you've had accounts open recently and you've closed them off, it's important to be able to still have access to them. But that's the main bank accounts that lenders could typically ask for, especially if there's money getting transferred back and forth between them. And a source of deposit, so if it's not coming from any of those savings or any of those statements previously, You can use things like your equity in your current home. If you're getting a gift, you would usually be expected to get likes of a gift letter. So the person giving you the money would be expected to give you a letter confirming that it is a gift. And they could be expected to provide bank statements as well to show the build-up of those funds. Personal loans, so if you're taking out a loan, whether that's from a company or from family, you would be expected to provide evidence of some form of loan agreement. And then shared equity. So if you're buying, maybe using the lift scheme, you would most likely be expected to provide evidence that you've already qualified for that scheme. So that's the key documents that you're going to be asked for, but there's a few others that could come in handy. So credit reports, I always ask for a credit report at the very first appointment from all of my clients. You might even be asked for an employment reference. The lender can do this directly, or you can send it to your mortgage broker. And if you're currently renting, you could be asked for a landlord reference as well. But that's it from me today. I hope you did find this useful, and don't forget to like and subscribe. Cheers.